In this talk, it's a little different from the other ones. We're going to have a conversation about really cryptocurrencies and market trends, because I think really that's what's most interesting maybe to discuss at this point. So, but before we get into that, maybe I'll let Hen give a few words of introduction about himself and his work at Alphachain.
Thanks for the intro, Makoto, and the kind words. Happy to be here. Exciting times. I'm the co-founder and managing partner at Alphachain. We've been a blockchain investment and advisory firm since 2018. We're based in Puerto Rico. My co-founder and I are passionate advocates for a lot of the tenets of cryptocurrency, decentralization, privacy, sovereignty, sound money, and independence from externalities like the central banks that complicate a lot of our lives. So very happy to be here and talk about SORA's vision for a global financial system.
Yeah, so the SORA Economic Forum really is a way to kind of share ideas about our understanding of economics and technology and really what the trends are. And I think in many ways, humanity is at a very big inflection point. I think we kind of saw many trends kind of exacerbated by 2020 and then later this year with all the lockdowns and economic difficulties, supply chain shortages. And really there's no end in sight currently to these trends. We've seen some basic commodities going up in value or in price quite a lot. So for example, lumber and other construction materials, food, energy, all these seem to be going up quite a lot. At the same time, there's quite interesting financial trends about central banks. So in 2008, they created a lot of money to bail out banks, but this was in the financial markets, and it didn't really get into the regular retail markets and affect consumer price indices. But we see kind of the very different trends now in 2020 and 2021 with the helicopter money and giving out stimulus checks to people. This is going directly into consumption. In fact, so much so that Lamborghini has sold out, I think, most of their cars for the rest of the year. It's not all SORA token holders, I think, but I mean, it could be, but I think it has much more to do with central banks basically creating money for consumption. So I want to ask you, really, how does this end in the long run? Do you think that that existing financial markets are really going to collapse or go through a large reset, whereas crypto markets can provide an alternative?
Yeah, it's an interesting question. So my co-founder at Alphachain and myself, we're both millennials. So when you think of big financial events of the last 20 years or so, the dot-com boom, we were too young to participate in that, still in high school when that money was being made and coming out, seeing it all collapse. And then 2008, 2009, you have the global financial crisis, a lot of speculative, even in some cases unethical activities from investment banks around the world. And that impacting us while we were in college and even at the beginning of our careers. And then you fast forward just over a decade later, and we have this global pandemic where we're told where we can be, where we can't go, forced to endure lockdowns. And what this translates into, I think, is just a lack of trust in public institutions, social trust in general, the idea that money doesn't imitate the UX we're familiar with. For those of us that spend a lot of our time in the virtual world, if I go into a bank, I'm just immediately frustrated. I want to walk out of there within minutes, seconds rather. So I think, what you're seeing is a lot of demand for the technology that blockchain promises in terms of financial innovation, recreating a financial system for the virtual economy. And you're seeing a lot of this demand reflected in DeFi. So pretty much any centralized function in the financial system there's a decentralized answer, being in the process of being created, whether it's custody, whether it's insurance, lending, borrowing, all with smart contracts replicating the role of an intermediary or third party. I think that is our future. It's hard to say, what our timeline is, but if you think about the last bull market, 2017, and the kind of fundamental news that's manifested now, this is what we've all been waiting for. So I think we'll continue along that trajectory in the coming years.
Yeah, it's really quite interesting that the crypto markets seem to be depending quite a lot on institutional money or finance. Like the great, the different Bitcoin trusts and different funds buying Bitcoin seem to be like some of the biggest drivers of growth. But that's really quite odd if you think about it, because cryptocurrency was originally supposed to be a way out of the system, not really just enriching existing participants. How do you think this fits into the greater narrative? Like, do you think that this institutional money is needed to continue to drive growth, or do you think that the UX of cryptocurrencies and can make it viable to a younger generation? Like, what are your thoughts around that?
That's an interesting question. I think if we look at what's happening in China and all the FUD now around the banning of mining activity, there's one view that the reason for this is that they're in the process of promoting a central yuan currency, a digital yuan. So they want to kind of be at the forefront of the digital currency trend and minimize the importance of Bitcoin. I think in the U.S., in order for this asset class to grow, the idea is that there's going to need to be institutional investment to raise the market cap of these currencies, to basically link markets and activities in the economy to digital currency. I think, Jerome Powell from the Fed has already said that they are already looking into seeing how they can design a digital dollar. So I'm expecting that to come to fruition, in the coming months and years. But for now, you are seeing kind of this tension, right? There's an inherent conflict with keeping money outside of the financial system, this idea of sovereign money, privacy, and wrestling that with incumbents who don't want to see their industries and businesses disrupted and outside of their control. So it's a conflict that's carrying on, and we see this reflected in DeFi. There's a prevalence now, anonymous teams that are looking to build financial products to where you don't need KYC, you don't need linkages to the greater financial system. But I think you're going to see both. You're just going to see more institutional capital flows into crypto, and people looking to sever crypto's linkages to the financial system.
Yeah, it's really a big conflict between, it seems like, this concept of, to put it bluntly, the dollar as the world reserve currency, and really the desire of many countries to change that. And then also, I think there's an implicit desire of many Americans to change it too. I think they haven't realized it yet, but there's quite a lot of burden being the world's reserve currency. You have to give up, you have to have a huge military to back that up, and you have to make sacrifices with domestic policy that maybe are not socially optimal for a single country to make. There's also generational conflict. So it seems like I don't know the statistics about the whole world, but in Japan, I think something like 70% of the wealth is held by people over 60, and so that that's a common trend in many developed countries. And it seems like younger people kind of see this as a way to also to kind of get out of the system and to create their own system that they can not just be dominated on from above. At least that's my impression. Do you think that this is really going to be the liberation that people are looking for, or is it just going to be replacing one form of slavery with another? Like, are people just going to be replacing the existing financial system with a crypto financial system that just enriches the same types of institutions?
That's a great question. To the generational conflict, I see that playing out in the States as well. We're all familiar with the OK Boomer memes, and it's already known that boomers are the wealthiest generation in human history. And it's a generation that's had a tremendous impact on our national politics. In many instances, you find draft dodgers and people that willingly avoided war and duty to country being rewarded with political success. That's happened, many times over and over again. And you could say that's a generation that started this skepticism of authority and this gradual process of deinstitutionalizing that we're now seeing playing out. I think with the demographic of people that are, let's say, under 30 or Gen Z folks that are digital natives, crypto is just intuitive. It's why wouldn't this be like anything else? I spend all my time on my smartphone. My money and should be the kind of UX that I'm accustomed to with everything I do in the digital realm. Whereas I could see much older people that have gone about protecting their assets and investments methodically over decades, may be a bit more reluctant to embrace it, may need to have a bit of handholding and banks opening up services and exposure to crypto for them. I think you're seeing a lot of different things there. It's likely though that we are going to see decentralization, being spurred and developed from the younger people that are active in crypto. You're already seeing crypto native companies like Binance, like FTX, being under threat by up and coming decentralized alternatives to a lot of their business lines, whether it's derivatives, even their spot markets through atomic swaps, and you have projects that are allowing that cross-chain. So you see that is really the spirit of crypto. That's kind of where you have a lot of the innovation, the creativity that is looking to undermine what you described as one form of slavery replacing another. I think that is a fear that a lot of people in the crypto space have. And you also see this reflected with a lot of the large cap cryptos, where I think it was a few years ago where there was a study taken out on measuring inequality in these networks based on, the token concentration, and the Gini coefficient was, worse than North Korea for networks like Bitcoin and Ethereum. Part of that makes sense in the early stages of a technology. You want to incentivize people to hoard and concentrate positions in these tokens by becoming wealthy as adoption grows. But I think over time, you'll see incentives play out to kind of part those people from these large stores of wealth.
Yeah, that's a really good point as well, that a lot of these networks now I think are really in their nascency, and it's not the final form. The technology is also evolving quite a lot, and even the financial and governance systems are changing. SORA is many generations beyond Bitcoin, but it's also more than 10 years later than Bitcoin. Yeah. So 10 years from now, I'm sure we'll have an amazing ecosystem in SORA as well. But yeah, I want to talk a little bit about kind of recent trends in DeFi. So you do have this kind of self-custody, and it's it really, cryptocurrencies at the beginning were really just about this narrative of like a risk hedge against central bank excesses, which in 2008 was kind of misguided because, like I said, central banks were creating money, but it was only in the financial markets. It didn't have anything to do with CPI. But 2020 is radically different. 2020 and 2021 actually are contributing quite a lot to inflation, and it's there's a lot of geopolitical trends. So power shifting to China and maybe some developing nations as well, and even like at a larger universal trend. We're moving out of the age of Pisces and going into the age of Aquarius, where instead of being relying on just being kind of shepherded around or grouping together in a school, the individual really is being empowered. And we see this with computing technology and AI that more and more, what you can do as an individual is really quite amazing, right? You have through your phone access to unlimited knowledge. And now I think DeFi is really kind of taking this concept and putting it into financial services. So instead of having instead of having to use like so instead of like choosing some provider and then sticking with them, you're just kind of taking your assets and moving from one service to another, and in the same day you can just mix and match like a dozen of these different services. So it's a radically different concept. So I was wondering, what are your thoughts on these trends? Where do you think DeFi is going? Is it more than just yield farming? What are your thoughts?
Well, yield farming is a innovative way to kind of attract people to a network and participate and get familiar with the technology. I think that the global demand for yield is such that you're going to see increasing institutional interest in DeFi. In fact, this morning I looked at DeFiPulse.com and saw that the amount of TVL, even now in this very volatile market, is just over $47 billion. So that is a lot of faith in the smart contract technology underpinning these platforms. And I think you're going to see more robust use cases developing for DeFi in the coming months and years. You're seeing solutions prop up to address insurance on chain. You're seeing, I think liquidity is probably the most acute kind of need out there from a market perspective. Projects like PolkaSwap are looking to address that, bridging Ethereum economy to Polkadot and allowing for a lot more liquidity without the congestion issues that you find with the Ethereum network. Prediction markets, asset management, middleware, DAOs are really interesting as well. You're seeing that these communities of investors are able to combine forces and, really challenge traditional VC, even in crypto. So that's something that I see continuing to evolve with innovation in terms of governance that's sought after at the moment. Because in some cases you have DAO entities saying they're DAO, but ultimately there is some form of centralization somewhere. So I think we're in a very experimental stage right now, but there's a lot of interest in seeing what ideas work, and this is an exciting time to be a builder in the space and also to be an investor. So I'm very bullish on DeFi.
It's good to hear that you're still bullish, even after the recent market downturn. I was wondering, like, what are your thoughts on the market cycles? Like, do you really think that this is going to be like a more or less follow the previous cycle in 2017, 2018, or do you think things are different this time?
Yeah, I mean, it's an interesting point. The way I look at price is, in the short term, it's a reflection of demand. And, we had an unprecedented bull run in DeFi that I think started from last summer with the algo stablecoin innovations. And that was extended through leverage. People taking leverage positions can extend the bull run. And then, ultimately, the bull market came crashing down. It had to at some point. But I think in the long run, price is a value of supply, and there's scarcity built into Bitcoin in terms of its issuance rate. There's a predictability there. It's a hedge, right? It's basically math against game theory and human nature and our legacy political system and economic system. You see Ethereum as it's going to transition to proof of stake, also adopt a deflationary token model. You're seeing in cases like PolkaSwap, that's happening. I'm very bullish on the technology. I just think we're still at a place in crypto where there's a lot of speculators, and they're going to get washed out gradually over time. And we are going to have boom and bust cycles. It's, I think, inherent in a technology this nascent. as it looks to find product market fit at scale?
Yeah, I think it's just a normal part, and I think you hinted on a very important point, and that's that quantities really are what is driving the market. So really, I think is the Bitcoin halving that eventually created a supply shock, which we have now, and I think that's really quite a common theme, and that ties into Sora and what I talked about in my talk this morning is that the quantities matter in these ecosystems, and the quantity of if the quantity suddenly declines, like for example the inflation rate halving, that's a big supply shock that will hit the market about 10 months after that happens, and that's what we saw in 2017. It's what we saw this time as well. But I guess the real question I have is, do you think that in the short term, like given the fact that there's not that many people using Bitcoin or other cryptocurrencies as payments in their daily life, like really this is still a money game, and the money games are driven by quantities. And so I'm wondering, like how much time do we have left in this bull market before we have another 2018, 2019 style 2 years of like every day going down?
I'm inclined to think that we won't see the kind of bear market that we saw after the 2017 top. I think where we're at now is we have a lot of institutions that are still on the sidelines that have to think carefully about second order effects if they were to put things like Bitcoin on their company balance sheets. So they're looking for regulatory clarity. And that's not coming from the federal government at this time. So what you're seeing is states kind of picking up on that and coming out with their own policies on how to treat cryptocurrencies. You're seeing this with states like Wyoming, which has been a pioneer. They've even passed legislation concerning DAOs and how they're treated. Texas, South Carolina, but obviously federal law overrides state law. So, when you're talking about multinational corporations that, have customers and stakeholders, not just even in the US, but throughout the world, it really does require Fed action on the regulatory front. And I think it's been slow, in coming to fruition. But I think at some point, once we do have those guardrails in place, you'll start to see more institutional capital flow into crypto, and I think it'll likely coincide with technical progress too, with these networks in terms of scale and just being able to address a larger market, a very public market of users.
Yeah, I think we're definitely getting there. I would say every 6 months, the technology significantly upgrades. The cool thing about Polkadot and building on Substrate is that you can upgrade the runtime, and we've done this actually several times. So you can you build in the upgrading process into the system itself. And so I think this will help things to be much faster and much kind of spur innovation in the technological side. But really, I think the biggest limiting factor is not the technology, but the economics, and that's really why we're building Sora in the first place, is because we do think that that you need a better economic system. But at the same time, DeFi and DeFi applications are really exciting. I think there's quite a lot of value that can be created. Especially because it is kind of like, in the Industrial Revolution, you went from people kind of sewing things by hand to, having huge, steam-powered machines that could do things about 100,000 times more efficient. And that's really the same level of efficiency increase that we see from the traditional financial system to kind of these non-custodial kind of money Lego type of systems that you have. And once DEXs like PolkaSwap have liquidity aggregation built in, where they start to take liquidity from multiple sources automatically, it's going to be quite fascinating, I think. So let's check out and see what kind of questions that we have from our audience. But here, while I get the questions ready, maybe you have some more thoughts on just what kind of DeFi products do you think you would like to see? Like what should people be focusing on building right now? You mentioned insurance, lending protocols, different yield farming to kind of make money on market inefficiencies. What's a really great area to focus on given the current nascency of the overall crypto space?
It's an interesting question. I think access to lending in a decentralized manner, wrestling power from credit bureaus. You've heard of stories in the past couple of years of big data leaks that have exposed millions of customers or consumers with companies like Equifax, and there's approaches being taken. There's one project, Spectral Finance, happens to be a co-founder at Alphachain that started it, and they're looking to tackle the problem of under collateralized lending. So say you have various wallets that contain digital assets, and collectively that contributes to your net worth. You could capture that wallet data in the form of an NFT and present it to a lender and be approved for a loan, and not have to put up the kind of collateral that you're seeing with platforms like Nexo and BlockFi, where the loan to value ratio is like 150%. So if you were to there's stories a couple years ago, someone bought a house in Holland. It was like $1.2 million, and to secure a loan for it from one of these platforms, they had to put up $3 million of Bitcoin in collateral. So we hear a lot about unbanked problems, and we tend to associate that with the developing world. But there's many people in even wealthier countries in the U.S. and places throughout Europe that just don't have sufficient access to capital, and are not able to use their net worth in a way that's recognized by the legacy financial system, and have access to the lending and to grow wealth. I mean, debt in a form is leverage. So I think that's really important. I think liquidity is also very important. Similar to people being left out of the banking system, you even have people left out of crypto. I mean, crypto is seen by many now that as a whale game. If you're talking about Ethereum and transactions that can result in hundreds of dollars of gas fees. So there's a whole demographic that wants to access crypto, but feels like they can at this moment. It's at their level of wealth, they can't play. So we need to look at things. I know you're looking to solve that problem with PokerSwap and allow people to transact and take part in DeFi without being accosted with these onerous gas fees. So I think more financial inclusion. I mean, that's really the whole point. And I think once people have that experience of participating in a financial system, they will take to a lot of these ideas of decentralization, sovereign money, and decoupling from institutions.
Yeah, I think those are really great points. Access to capital is something that I really understand a lot as a business owner. And it's, as an SME, it's really hard to access capital in many countries now. So that really does limit economic growth, because the majority of productive output comes from SMEs, right? So, and innovation. So it's a little bit, it can help everyone if we can give access to capital more. And that's really one of the goals of the SORA ecosystem, is to be able to basically mint tokens and give them to people to build things. And that's the basic model. And I think that, doing this in a decentralized way is really important, because you don't really want any company or business or individual to do this for their own benefit, because you want to kind of do it for like the benefit of everyone and build the right incentives and mechanisms so that if more companies, for instance, use SORA, it kind of helps everyone. It's not just helping a single individual. So it's kind of like a human collective in a way. There's some really great questions from our audience. One is, Do you think that the crypto movement can give a new model of organization to the world, kind of like a theory of economic blocks, or maybe composability, I think is a better term?
Yeah, I mean, I think one of the great things about crypto is how borderless it is. A lot of us that join these communities for networks like SORA, we live all across the world. We're communicating every day, sharing information, sharing ideas, and crypto's bull market cycles are often analogized to the dot-com boom. But that was totally different. I mean, if you wanted to participate in that, you'd have to call the broker. It was 9 to 5, Monday through Friday, based on your stock exchanges, trading hours. This is 24/7. We're using apps like Telegram and Signal. I think there's going to be a lot of disruptive paradigms that come out of this. And I think one that comes to mind is really just the concept of the nation state in general. A lot of us in crypto are very mobile, where almost as if we're not identified by nation at all. It's really about your own individual identity being what matters. And I think crypto is really accelerating those kind of trends in a very fast way. You're already seeing tax incentives being created to attract crypto entrepreneurs and to incentivize them to set up residency in foreign countries. You saw that recently with El Salvador. So I think that's one of the things that really stands out to me about crypto. It's just this decoupling from institutions, from kind of broader divisions in our society.
Well, there's always been a very strong libertarian streak and the idea of the sovereign individual. And as a computer scientist, I think, naturally a libertarian myself. Actually, when I was an American, I actually was registered in the Libertarian Party. And though they were not, I guess, so successful. In America, it's kind of cliquish, and you can't really, the game's kind of rigged. You can't really have more than two parties, unfortunately. Yeah. But but I think one thing that people, especially Bitcoiners, seem to focus on too much, I think, is the individual being too sovereign. And you really have to realize that, we do live in a society. We have to collaborate together. You can't just have decentralized money. You have to also have a decentralized governance system and decentralized political structures, because man is a political animal. You have to work together. Otherwise, you can't, really push humanity forward. You might have a good life for yourself, but it's kind of meaningless since we all die anyway. So to me, that's really like a very common theme, is like, how do you build collaborative structures that people can kind of help each other out, and so you're not just alone doing things on your own. Back to the nation state. Nation states were, for a very long time in human history, a very important point around how society was organized. And I think that's changing a lot, especially with COVID. I think a lot of people, well, these people with, who are paying attention, they kind of realize that their government's really not looking out for them that much. And they have some other agendas or whatever, who knows what's going on. But we saw a lot of weird trends in the last year. And I think that's starting to wake up a lot of people, and they're starting to see, hey, maybe there's different ways, or maybe my, for COVID, there's no statistically significant increase in deaths for people under 60, but you can't travel overseas. Like, why is that? So people are starting to ask very important questions, and I think that's also making them question the monetary system too, because the monetary system is getting more and more restrictive. Global minimum corporate tax, different concepts like this that really are limiting the individual freedom and individual sovereignty, I would say. Human rights is another way to put it. Let's see what else, what other questions we have. So I think people mainly were asking the same types of things that I already asked about, like individual freedom and responsibility versus kind of big institutions coming into the space. And making money for themselves, and using that money to to build rules that rig the game and kind of oppress everyone. So hopefully we can create true decentralization so that humanity really does have a way out. I mean, there's still a lot of risks and a lot of things that are not known. Even the basic structure of the internet is extremely centralized. There's last year, this year or last year, one of the guys from the US who owned one of the signing keys for like a DNS died, and there's a big question who would get the next key. But that kind of gave up the point that there's like only like 10 or 12 people around the world that control the whole infrastructure with these signing keys. So we really need to rethink a lot of the basic fundamental structures, and try to make things a lot more resistant. Anyway, we're a little bit over time, but I really appreciate you joining. As usual, your insights are really exciting and creative, and I think they're really important too. I think especially with DeFi, it's important to empower the individual and to help people kind of reach their full potential and not just be a cog in the machine, I guess is what I want to say. So thanks a lot for joining, and I hope you have a great day. Thanks.
Thanks for having me on. Appreciate it.